Welcome back today. We're diving into something that a lot of people are either ignoring or just don't fully understand. We're talking about Monad, one of the most talked about cryptocurrencies right now, yet it has been performing surprisingly poorly over the last week. Stick around, because we're going to break down the numbers, analyze what's really happening behind the scenes, and discuss whether there's a hidden opportunity that could catch the market off guard. This is not financial advice. Please do your own research before making any decision. Let's start with the basics. Monad has been in the spotlight recently and is actually one of the most viewed cryptocurrencies on CoinGecko. But despite all the attention, its price performance has been weak. In the past week alone, Monad lost 33%, a much sharper decline than Bitcoin in the same period. Now, here's an interesting twist. Even though the price has been falling, the total capital locked on the chain hasn't followed the same downward trend. In fact, the TVL, or total value locked, just hit an all-time high of $218 million. Stablecoins are staying put on the chain, meaning there's no major outflow. That's unusual given the drop in price. Activity, however, tells a different story. Trading volume on the decentralized exchanges of Monad's chain has dropped from its peak of $311 million to around $70 million over the past 2 weeks. Chain revenue has also leveled off at a lower but stable figure. So here's the paradox. Capital is stable, activity is lower, but the price continues to decline. What's driving this divergence? Looking at broader market trends, Monad peaked on November 26th, but since then, its token has underperformed the overall altcoin market by roughly 58%. So, even with a TVL at all-time highs, Monad's price relative to other altcoins is close to its lowest point. If we break it down further, we see metrics like daily active accounts, transactions per second, and token transfers all initially rising but now declining. So, it's not just price. It's a combination of reduced network activity and broader market sentiment. Another factor keeping the price suppressed is Monad's tokenomics. Every month, about $3 million worth of new tokens enter the market through validator rewards. That's about 1.6% of the current market cap of $189 million. Naturally, this increases selling pressure and impacts price, although it alone shouldn't account for the dramatic underperformance we're seeing. Interestingly, this situation creates a potential opportunity. With the market cap under $200 million, a relatively small amount of buying can trigger a significant price move. There are early signs that some market makers may be accumulating Monad, potentially setting the stage for a short squeeze. Let's talk holders. On Solana, for instance, the number of first-time traders is dropping daily, now at only 160 wallets. Token transfers and trading volume are also decreasing. But when we look at wallets holding larger amounts, say around $10,000 worth, there's evidence that some smart money is buying near the bottom. The percent of supply held by larger retail investors is also rising, from about 30% to roughly 50%. Historically, coins with this type of supply concentration and consistent underperformance are prime candidates for short squeezes, particularly when the retail crowd is overwhelmingly betting on falling prices. Right now, perpetual futures trading is more active than the spot market. Spot market trading volume is around $30 million, while perpetual futures sit at $55 million. This suggests that there's a significant amount of speculative betting on price declines. However, the open interest is about $76 million, roughly a third of the market cap, which means market makers could push back against short sellers and trigger a short squeeze. History shows us that coins like Trump token or Solana have gone through multiple cycles of underperformance followed by massive short squeezes. Monad could follow a similar pattern. Betting purely on falling prices is risky, especially with a market cap below $200 million. Even small capital inflows can significantly impact price. Looking at the 2025 market as a whole, Bitcoin investors experienced minor losses of around 8%, but altcoin holders suffered much heavier blows. Many smaller altcoins dropped 70–90% over the year. Influencer hype often drives retail interest in these coins, leading to massive underperformance. Altcoin markets also face heavy token unlocks, roughly $700 million monthly, compared to $284 million for Bitcoin. For smaller coins like Monad, this creates enormous relative selling pressure, contributing to persistent downtrends. So, what does this mean for investors? Right now, the market is not favorable for chasing the next 10x or 100x altcoin. Low attention, heavy selling pressure, and high volatility make it extremely risky. Instead, focusing on long-term strategies, such as compounding gains from more stable assets or selective positions in undervalued coins, is safer. Copy trading or diversified, actively managed portfolios can outperform simply holding Bitcoin. For example, a controlled beta copy trading project showed consistent monthly outperformance of 1.9% versus Bitcoin modest, but steady and sustainable. Here's another point worth highlighting. Very few crypto influencers actually share their real trading performance. They often promote small altcoins not because of genuine conviction, but because of advertising deals or kickbacks. This creates unrealistic expectations for retail investors chasing massive returns. By contrast, focusing on consistent, evidence-based strategies rather than hype can prevent devastating losses, especially in altcoins with high volatility and low liquidity. To sum up, Monad presents a unique case in the current crypto environment. 1. TVL and capital on-chain are stable, but activity is declining. 2. The token is underperforming the altcoin market but has potential for a short squeeze due to concentrated holdings and speculative shorts. 3. Tokenomics add a moderate selling pressure, but market manipulation by smaller capital inflows can create outsized moves. 4. Altcoin markets face significant selling pressure relative to market cap, making long-term gains through high-risk altcoins unlikely. 5. A disciplined, evidence-driven strategy outperforms chasing hype-driven moonshot opportunities. In conclusion, Monad isn't necessarily the best long-term hold due to inflating token supply and limited adoption growth. But the current market conditions could create short-term opportunities for contrarian investors. Meanwhile, chasing high-risk altcoins with the hope of massive returns is extremely dangerous. Focusing on steady, sustainable strategies, combined with data-driven analysis, remains the smartest approach in 2025's volatile crypto market. Remember, low market cap coins can be manipulated with relatively little capital. Understanding market dynamics, supply distribution, and historical patterns is key to navigating these waters safely. Thanks for watching. Hit like and subscribe for more daily crypto insights. Catch you in the next one. Stay crypto smart.